Hey guys, it's Philly Trades. I'm going to show you what's happening in the market and how I trade. I'm not going to go too full in depth with everything, but I'm going to show you little examples on how I'm going about the market and how I trade with my setups and what I look for and some good stocks to buy at low price. What I mostly do is buy stocks at low price and then sell them high. Buy low, sell high. Pretty sure most of y'all who swing trade or know how to trade know this is pretty much obvious. Buy a stock at a low price and then sell it at a high price. So, QQQ, look at the environment we are in currently. This, for my strategy, my environment does not align with this. It's consolidating, chopping. It's been happening for 2 months already. So, what do? Stay patient, lower our risk, take less trades, or don't even trade at all. Protect your capital. Please do not burn your capital. Why are you going to give the market your money when it's your hard earned money, you know? Um, my strategy aligns with this right here. When QQQ is rallying like this is where I'm trading shares, options, and just going a little bit heavier in my size to make more money. But let's get started. I'm not in any positions right now. We're going to start looking at some stocks and examples on what I look for. So ignore everything over here, this side right here. So what do we look for? As you can see, service now was trending down, making higher lows and lower lows, higher lows and lower lows, higher lows and lower lows. Stocks move like a staircase. Let me go back to QQQ and show you for an example. As you look at QQQ, really easy. High, staircase, makes another high, staircase. It moves in staircases, guys. Just and now we're waiting to go lower. We're making the staircase or to go higher. That's simple, guys. Stocks move like that. It's not perfect every time. You're not going to see a perfect staircase. You might see a staircase that looks like this, goes really low, but they're making highs because look, one high, two high, three highs, four highs. Pretty simple, guys. I'm not going to go too much in depth with this. I'm just going to make it really super simple so y'all can understand. Delete these real quick. Sorry, guys. All right. But like I said, QQQ doesn't align right now. It's not in the environment I want, so I'm kind of chilling right now, laying low. So let's look at service now. Was trending down, like I said, moving in the staircase, but it's going on a downward staircase, going low, making a high, low, high, low, another high right here, low, high. Just you see what I'm saying, guys. I'm not gonna go too crazy. It's really simple just to understand. So this is the wedge bar. This is the first stage I would look for to take a break at. So we've been trending down for a few months, maybe a year. I don't know how long it was. A few months, and then boom, we break out of this wedge. If you see this, this is the best stage. Why? It's the first stage. It's the best stage. If you ever get an entry right here, guys, stop loss at low of day. My stop loss is always at low of day. And you just hold. Why? Why is this the best stage? Because all you're doing is holding. You've done all the hard work. It's just holding now. The only hard part is holding. But look, I'm always looking for this low risk, high reward. This is a 1 to 13. So if you're risking $1, you're getting 13 out of that. Who wouldn't take that, you know? It's just common knowledge. Look at this. Just beautiful. You can take this in shares and options. If you take this in shares, go heavy and just hold. And my defense when I want to like these EMAs, the 10 EMA, which is a green one, the 20 EMA are like it's my defense. Why? Because look, when I get in this trade, we go up and then we pull back to the 10 EMA. That's my first line of defense. So if it breaks that right here, I trim some of my position off. Why? Because it most likely it can fail like this right here. So you can see it started failing down. if it closes below the 10, no, the 20 EMA like this, either you take 90% of your position and just keep holding because you've got a good entry at the first stage and then hope it starts coming back up like this. But look, I would have been stopped out at break even with like the 10% of the position that I would have had left. Because if it hits break even, get out of that after a big move like this. Or if you can take all your profit up here or trim everything, you know? But as it's going up like this, you want to keep taking profit. You know, you want to take profit up here, up here, up here, because, you know, the point is to make money. It's not just to watch it go up. So as you're taking profit, you know, take advantage of that. But this is the first stage, the best stage, because all you're doing is holding. The second stage of what I look for, this is my bread and butter, the wedge pop right here. Just as I look for this every time. It happens every stock. You're gonna see in all the stocks I show you. You're gonna see the same thing. Second stage. Once we do the wedge pop, the EMA crossover. This can tells you, hey, we might start going up. We're gonna be bullish now. So when that happens, when you get the EMA crossover, you don't want to enter here, 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 because you don't know if it's going to pull back. You don't know if it's just going to go straight up like it did right here. So, what up, guys? So when you see this, when it hits the EMAs, either the 10 or the 20 EMI, oh no, the EMA, you want to look for a bounce. So for this day right here, your entry could be here or on the, well, it hit the 10 and it even hit the 20. So it hit the 10 right here. So you look at this, we're gonna go on the 5 minutes and show you better. So should be somewhere around here. It's a Thursday, the 9th, Friday, Thursday right here. Where is it? Right here. So if you see that, the EMA was right here because I put the line on it. The EMA is right there. Yes, look, market opens at 9:30, so you kind of missed your entry right here. Usually when you see the EMAs, you want to have a entry right here near the EMA. You don't want to have it up here or over here. You want to have it near the EMAs. Why? Because that's the best entry you could have. I understand market was closed. So if you see that, it's okay to get in. Just know you can get stopped out and you got to be okay with a re-entry. The only time it pulled back was right here. So I guess you could have got the best entry right here, but no one knows what's going to happen. So it's better just to get in and put your stop loss at low of day. Either way, you would have never gotten stopped out because every time I take a trade, my stop loss is at low of day. Low of day was right here because what does low of day mean? It's just the lowest point of after market open. So at 9:30, this is the lowest point. It's my stop loss. But for this, you always want to wait 15 minutes until market open because you know you can get faked out. It can just manipulate you. You don't want that. So right here, you would just wait, wait, wait. You got to pull back. When you see this right here, you can enter right there, and boom, the rest it just rallies. This just tells you a story. You know, you just let it go, climb, 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 and go up higher for you. That's the second stage. The third stage with the EMA crossover and the pullback into the EMAs. But yeah, you can take that in options or shares, just depending. Shares is safer, options is more volatile, but you can make money quicker. You know, it's higher risk as well. So it's up to you what you want to do right here as well. I'm not going to go too much full in depth with every stock I'm going to show you, but that is what I look for. Right here as well for service now. Buying here, one thing I do want to say, buying here at the $90 level was a good long-term hold right here. This level right here. As you can see, if you want to hold this for long-term, 110 is a little too high. You can still buy it there, but just keep a stop loss on shares, you know, because you don't know if it pulls back lower, get out of it and then move your average cost at like a $90 level for here. But besides that, here as well. Wedge pop, EMA crossover, pull back right here with this candle to the EMAs. Put just a line right here. If you see it, if you see it with volume above that, take it near the EMA. Stop loss low of day. The rest is just history, you know. Take it right here, this day, stop loss, low of day, and then the rest you just hold. That's the hardest part, just holding. That's all it is. I spelled wedge pop right, wedge pop wrong right there. Take that off. But that's all it is. Carvana, another good stock. You usually don't want to trade stocks that are below the 200 EMA, but if it's a good stock like Carvana or Now, these are all good stocks. And also know your environment. The environment is not that good. As you can see, everything on my watch list is red besides service now. This has relative strength. If you ever catch a stock with relative strength, stay in it because it's just going to keep going higher and higher while everything is red. And no, it's not, you're not always going to catch those stocks with relative strength. It doesn't like it's hard to catch them, you know. But your job is to find those when the market is down. It's much easier when the market is pumping and green. But Carvana, why do I like this? It's literally a bull flag. Why? Because look at this. It's making a tight wedge, just like QQQ. It's consolidating. The tighter the wedge, the tighter the consolidation, the bigger the move. So, how do we go on about this? We just wait for it to pop the wedge. Make sure, we just make sure it breaks. Make sure QQQ is green. Make sure the environment looks good to take. You can do this for shares. You can literally buy right here shares for long term or for like a few months and just keep adding more as it keeps going higher. But if it ends up breaking that wedge, look, I don't know when it's gonna happen. You just stop loss. Let's just say your stop loss is right here. Trim right here at this high, trim at this high, or you can hold till this high. You're doing a 1 to 7. That is, you're risking $1 to make $7. That is a good return, you know? Super simple, low risk, high reward. Same thing right there. This is all I look for. Coinbase, another stock. Wedge pop right here. Wedge pop. We don't have an EMA cross nor a pullback. So what do? Step away and just wait till we see what we like. Right here, we did get a wedge pop. Coinbase was trending down. We get a wedge pop. EMA crossover. The pullback. This one failed. It doesn't always happen. So if you get it right here, you get an entry right here somewhere. Okay, good. It went up. This is not the cleanest price action, but still, you know, it just wedge pop, EMA crossover, it continued popping. Okay. Just I'm more patient on Coinbase just because it hasn't gave me the EMA crossover. I will take it above here if it starts showing bullish pressure if the environment is good. Right. So, Oracle, this is a different strategy right here. Not different strategies, just a different, like it's not a wedge pop or anything. It's a liquidity sweep. So this is support right here. This 133 level support. As you can see, we're breaking it right now. Look at this. I'm gonna give you an example. This low right here got swept by this. And what happened? We rallied to the upside. That is what we look for. Look at this wedge pop, EMA crossover, pull back to the EMAs, and just you add right here to this thing. Rest is history. It just makes you money on options, whatever it is. Like I said, these EMAs are your defenses, so they tell you what to do. So for this, I'm gonna wait for liquidity sweep. Since it already got swept, most likely what's gonna happen is we consolidate here for 2 to 3 days, maybe longer, and then when I see bullish price action, when the environment's good and it gets above this green line, I will take it. I'm going to be a little bit more patient because I see that happening a lot. What you usually want to happen is this right here, where it just sweeps and reacts good. But the environment is not good. I guarantee you, we're going to pull back to the 160 level. I've seen it so many times. I believe it. I've seen it. This is something for more advanced traders to take just because, what you usually want to happen is this, but it's not happening. Just going to be a little bit patient with that. Let's look at Arlo. Arlo, another wedge. This looks super tight and it looks like it's ready to pop. It's above the EMA, it's just below the 200. But look at this setup. It's just really tight. Look at this. Just when it hits this this $13 level around there. If I see it just crossing with bullish pressure, I'm taking it stop loss low of day. The rest is history. That simple. We don't want to make this super hard. You don't want to over risk, over trade on your trades. Just keep it really simple. You got to know what you're risking. You got to know what you're losing. You got to know what you're making. Tesla. We got a wedge pop right here. Look at this. I'm gonna tell you. Look, super simple. Wedge pop. EMA crossover. Like I said, if you ever get an entry at this stage, good. Hold it. You might get stopped out. If you get stopped out, okay. So what? It's gonna pull back into the EMAs, and then you get another entry right here. Stop loss low of day. The rest is history. You make money, you trim on the way up. Right here as well, I thought we were going to get another wedge pop. We did, but we fell. We got an EMA crossover. We're pulling back. We did get above, right? It looks like we did. From what I'm seeing, we did get an EMA crossover, but it's failing to go up. So, we just wait for it to break this level right here. If it wants to go higher, and it might just want to reverse it. Who knows? We don't force anything. We just wait for it to tell us a story. Here, what do I right here is a good dollar cost average to own Tesla long term. Either here, these lows right here, we don't know if it's gonna pull back. So I just have this level so I can buy a few shares and hold them long term. That's it though. I don't want to overcomplicate this my trading strategy and what I do. I know you see all these lines and EMAs. I haven't spoken about risk management, how I go on with the EMAs, this volume right here, the ADR down here in the peak, as you can see, this 4.50 ADR. There's a bunch of things I haven't talked about, but this is my first video. I just want to give you an idea on how I trade and what I look for. I'm not a really super complicated trader. I know there's a bunch of traders. I know a trader that I work with at one of my jobs, and he has like 50,000 EMAs on his chart. He trades algorithms, and it's just like wow, it's like crazy just to look at that chart. It just hurts my brain looking at that. I keep it super simple. So guys, if you ever want to learn how to trade, I will be making a Discord soon. I just moved out to Texas, to Houston, so I need to get settled first. I just got my apartment and stuff. Life has been happening. Been having so many problems outside of trading, so literally been off the charts and not on it too much. But we'll see how everything goes. I'll be back and making more videos soon. All right, guys. I hope you enjoyed. I hope this helped you out a little bit. Yeah, you guys have a good day.